Hey everybody, good morning, good morning. It is 8 o'clock in the morning on the 7th of October, and today is the first Friday of the month, and you know what that means. Today is non-farm payroll day. We're going to get some important numbers here in about 27 minutes. Before we get those numbers, I did want to do a little bit of an outlook on the market. Dare I do this? This video is either going to age very, very well, or it's going to age very, very badly. So what I want to do is I want to take a look at a revised count, which is a little more bearish. So we'll see how it works out. I was posting on Twitter yesterday about a member that was challenging me to take a look at a chart from a different perspective, and so I've done that. So I really have three different paths. Two of them are bearish. One of them is pretty bullish, but a couple things need to happen before the bullish scenario actually becomes a reality. I want to talk about that. So of course, before I get into any more, this is not financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research, and I'm just giving my opinion on the market. So let's go ahead and move on into the chart. So I've got just SPX on here. This is the cash session. This is not our ES futures. The ES futures, I have a slightly different count on there. But what I want to look at here is something that's actually pretty important. So I'm on the 30-minute chart right now, and let's take a look from the very top up here. Okay, from the wave structure down, I think what a lot of people were looking at this as is a 1, 2, 3, 4, and then we've got our fifth wave down. Well, there's just a couple things here that I don't really like. And that's, we went up significantly from here. Yeah, we did not violate this high. I don't believe. I actually haven't checked this. Let's just take a look here. Did we violate that? Let's just kind of zoom in and see where we landed with that red line. We didn't. We didn't cross it. So technically, that count is valid, right? So it could be that we have a 1, 2, 3, 4, and then we finish that wave 5. But I started looking at this with a different view, and I think this is kind of important to point out that there is a possibility that we have a very bearish scenario that is that's coming our way, and I want to talk about that. So first off, very, very possible we have a 1, 2, 1, 2, and the reason why I like this second nested 1, 2 is where is our target typically for a wave 3? We talk about this kind of stuff all the time. Well, our target for a wave 3 would be this, the 1618 to the 175. And well, where did we go? Let me actually tag this a little bit better. I want to get it as close to the bottom and the top as possible here. So approximately, 4119, we're pretty close there. So for the bottom of the wave 3 that I'm seeing here is this move right here, right after we've got a big 1, 2, a big 3, 4, and then really kind of a short, almost truncated wave 5. And then from there, that'd be the wave 3, which hits our target between the 1618 to the 175. It really hits that pretty well. Let me again kind of re-tag this down here to the bottom as close as possible. From there, an expanded flat ABC. All right. So let's look at this here for just a moment. All right. When we look for a wave 4, Elliott wave theory usually suggests that we're going to retrace to about the 38.2, 38.2% internal retracement of wave 3. Okay, so again, what I mean by that is we're measuring from the beginning of wave 3 to the end of wave 3, not including the expanded flat, right? And again, the expanded flat A, B goes lower than wave 3. And then C goes higher than where wave A was. I mean, we kind of expect that for an expanded flat. And we can, take a look at the ES futures and kind of make this expanded flat make sense. But now, where did we land? Okay, where did we land? All right, let's just go ahead. This is the 382 at 3805. Well, look at that. We went to 380, almost 3807. So we tapped that 382, and we have since rejected. So I really have no choice but to acknowledge the fact that unless we get above the 382, that I think we do have downside. Now, what would it take for me to change my mind? Okay, what would it take for me to change my mind? All right, well, first off, I'm on the 30-minute time frame here. Let's take a look at this. All right, so what I've got here, let me just kind of go into the settings to show you this. I have the 21-day exponential moving average. All right, so the 21-day is sitting right here, currently at about 37.98, right? If we can get above that, well, then I think that we could probably see, a markup even higher, okay? We would need to close a daily above that, though. Okay, we would really need to close a daily above that, and then I think that would probably get us to higher prices. Until that happens, I have to kind of remain a bear. Even though we have had earlier this week the two biggest days that we've seen in the stock market in a really long time. And you can combine those 2 days, it's the biggest 2 days that we've seen in a really long time. But now we've just kind of stagnated, right? We got close to that 21 exponential. We got our mean reversion. Could we poke up above it? Sure. But if we close above it, depending on how we close above it, that would make me start to lean a little more bullish. But right now, this seems to me like another bounce, just another dead cat bounce. And we've seen them over and over. A really great example is, we have this move right here. This was a decent sized move. And well, we shorted, it was a day early, but we did short that. That worked out, obviously, right? So in a bear market, you have to have that mentality that you're going to be basically selling the rips. And that's all we did here. We had two of the greenest days that we've had after a break to new lows. You would expect what is commonly referred to as an automatic rally off of the lows, right? That's a Wyckoff term. A Wyckoff accumulation, you have an automatic rally on a spring off the lows. And that's exactly what we had. But what ended up really happening? Okay, what ended up really happening? All these people down here, they were like, yeah, we broke those lows. We're just going to keep dropping into next week. And what ended up happening? Bears got their faces ripped off because you have all of those people that had stop losses below 3,600. You had all those people that opened up new short positions below 3,600. And then all it took was Monday and Tuesday for those things to just completely decay. And now here we are. We have a rip. We've got a lot of people questioning their bearish thesis. I would say that I'm not questioning my bearish thesis, but I have to acknowledge the fact that if we start to break certain levels, that I have to kind of flip, right? As a trader, you have to be able to adapt to, changes in the market. Right now, we are in a bear cycle. You can't tell me that we're not in a bear cycle because we are. And I lived through the 2018 Bitcoin bear market. I survived another day. And here I am right now telling you, we're getting a little bit of a rip here. Watch your indicators, watch your fib levels, because these are going to be key to, kind of paving the path to the future. And I'm not going to talk about where I think we're going to go right now on this video. If you want that information, you have to be on our Discord, where you can find all of that information on bitdoctor.org. But at any rate, if we've got a 1, 2, 1, 2, and then 1, 2, 3, 4, 5 into the 3, A, B, C into the 4, we should be going down into wave 5 of our yellow wave 3 that we've got on here. And again, that is supported by the resistance that we've had at the 382, which also coincided with, again, that 21 EMA on the daily. I'll put that back up on here. That's our 21 EMA on the daily, right? So staying below that will basically lend a bearish lens to any view that I have on the market. If we're below that 21 EMA, then you should be absolutely shorting a test of it at a minimum, right? And so, now here we are. Here we are. Just to kind of give a little bit of perspective. The last time we got up here, right, we did short at the 21 EMA. I did kind of squeeze out of some of my short positions, but I kept a majority of them. Up here on the next day, I should have waited one more day. Hindsight's 2020, but we got up above that 21 EMA. We gapped up the next day. then we fell. Now, what happened here? We got up to the 21 EMA, right? We kind of pulled back. We retested it, and we actually tested it this time. The previous day, this was back here on Tuesday, we actually did not test the 21 EMA, but we did test it here on Wednesday. And what has happened since then? We have not gotten above it, where we did do that back here on Friday, September 9th, right? So, gosh, hard to believe, a month ago, we were at this very same spot, but at much higher prices. But now here we are testing that. We're not pushing through it. Now, that certainly could happen today, that we could push through it. That would be fine. That would be fine. That's part of the game. It's part of the game. If we get up above that today, well, then I may change my mind. But for right now, we're below that 382, which is a wave 4 target zone. So here we are. So that's kind of where my thoughts are on the market right now. If you have any questions, you know where to find me. You can find me on Twitter. You can find me on Discord. Feel free to ask any questions on there. I'd be more than happy to try and collaborate with you. We have really great, healthy debates and discussions on our Discord. This count right here came off of a question from one of our members asking, hey, do we think we have a bullish count or like a bullish possibility here? So I went back to the chart and I looked at it, and that's when I saw this, and it made a lot of sense that we went down here to the 175, right? And we're rejecting at the 382, and that's common for wave 4, right? This is common for wave 3. This is common for wave 4. So I have to look at this with, the history that I've got, looking at the market and watching the market cycles. And the market cycle that we are in is a bearish market cycle, and it's been like that all year long. So, looking at that, I have to think there's something going on here that probably not a lot of people are really going to be expecting. So we'll have to wait and see how things go. Non-farm payroll, again, is coming in 15 minutes, so we'll see how this ages. But I said it before, I'll say it again, a break of the 21 exponential on the daily and a close above that 21 exponential on the daily, again, that will likely, point us higher, at least in the short term, right? We will have to wait and see how things resolve, over the coming week. But for right now, that's kind of where my thought is. As long as we're below there, it really doesn't make a whole lot of sense for me to be super bullish. But I will have to acknowledge when certain levels are broken, and then, kind of change my my thesis from there, and maybe start, again, buying stocks again. So hey, thanks for the comment on the YouTube chat. Glad that was helpful. I really appreciate that. I'm going to go ahead and end it here. If this video did help you in any shape or form, like, subscribe, share, share it with your friends before non-farm payroll here in 14 minutes if you're watching live. If you want access to our Discord, if you want access to our trades, you want access to education, good collaboration from a lot of really, really great people on our Discord. You can find all of that information on BitDoctor.org, including access to our free biweekly newsletter. You can sign up for that on our website as well. All right, that's all I've got for you. Wherever you are in the world, I hope you're having a good day, good night, good evening. Take care, and we'll see you all in the Discord here in just a little bit.